Thanks, James Morin here from Norcom Mortgage. Excited about this, and this is a true story. I was thinking about buying a vacation home. Went and had it appraised, and they said it needed $80,000 worth of work. And I was like, I can't afford that, because they said they were only going to give me the mortgage for the value of the purchase price, not for the amount of the repairs. And this 203K that we're talking about today, that actually could have helped me in this situation, right?
Potentially. It's not. It's supposed to be for an owner-occupied property, so vacation homes throw a little wrinkle into it.
All right.
But in general, it's for 1 to 4 unit properties. And yeah, in that particular instance, if you were going to occupy the property as your
right, I wasn't going to rent it out. It was going to be
exactly. It would absolutely help.
All right, so let's talk about the traditional. Like, a person's out there, they're looking at a home. They walk in. This is going to be their primary residence, and it's let's say $200,000. They go through the house. They want to put an extension on. It's really not the way that they want the house. They want a new kitchen. They want They want the den. They want the family room. They want whatever. And they have a contractor come in, and he says, you need about $200,000 worth of work. You can get a loan, you can get the mortgage for the appraised value after the work is done. Is that right?
Yes, you can actually get in. You can do, with the 203K, with the Norcom Dream Loan, you can take these things down. You can add bathrooms, bedrooms, and you finance the cost of actually doing the repairs before you even get into the house.
Okay, so let's do a scenario. Let's run it through. I find the house. I go through. I say, this is the house that I want, and it's $200,000. It needs $100,000 worth of work. What's my next step? I call you guys. I qualify for this 203, and it's not based on how much you make. It's not based on, you can make $1 million or you can make $50,000, and you can all qualify for this loan.
Well, you still need to meet the underwriting requirements of a normal traditional loan, but yes, there are no restrictions on what you can make on the high side. On the low side, you still got to make sure you can afford the mortgage payments. But in theory, yes, you would be able to walk in if the contractor comes in and an appraiser says that it's going to be worth $300,000 after the fact, after you do all the upgrades. We'll actually let you borrow up to that amount, and then you can finance in $100,000 to do the bedrooms, bathrooms, do the addition you had mentioned, redo the kitchen, put a new roof on, really do whatever it is you want, to make that house a home.
So you're going to give me $100,000 for the repairs. Let's say I go up to Rio and gamble it away. Is that not right? Can I do that? No.
That's not a possibility. Yeah. The funds are actually held in escrow,
right,
and as the contractors complete portions of the work, funds are released to them. So yes, we would hold back the $100,000, and then as work gets done, disbursements are made to those contractors that actually did the work, cost of materials. So you're not going in. I apologize, but you're not. Okay. I'm not sending you to Rio.
But that's fantastic, though. So the money that's allocated will actually get used, no ifs, ands, or buts, towards the repairs or the renovations of the home.
Absolutely. Anything that's left over actually reduces the loan amount. So if you do end up with monies available at the very end, we'll just reduce your loan amount, and then you get to go from there.
And this is really, there's going to be an infomercial that's right. It's going to be shown right here on Channel 3. I think it's October 18th and October 25th. This infomercial is going to explain in detail. You actually went through a property in Farmington, and it was, I don't know, it was really a ridiculously low price.
Yes.
And you got this loan, and you refurbished it.
Sometimes.
And this is some of the video that we're looking at, some of the things that you could do. So you could walk into a pit and have it refinanced and have it the way you want it. Now, this has to be government, you have to have a person with the contractor that comes in to estimate the work, right? That's where the HUD comes in?
All of the details, I would suggest watching the infomercial, calling one of the loan officers at Norcom. They can walk you through all the details of how and why and what steps you need to go through. But absolutely, anytime you have a foreclosed property or a property that you just wish that you can make some changes to, you can use the 203K and just make that house a home right from the very beginning.
And I think a lot of people out there think this might be just for foreclosed homes. It's not.
It's not. You can do if you currently own the home, you can refinance and take some cash out to do the upgrades, as well as all too often we see people that move into the property and they go through, they have closing costs and down payment. They don't have the funds to do some of the things they want to do. They want to change a bedroom or a bathroom or a kitchen right away.
Right.
This allows them to put it in and have it part of the mortgage so they can actually move into the house they want.
203K, perfect to find the worst house on the block, worst house on the best block, get the mortgage for all of the repairs and the fix-ups, and the interest rate is competitive.
Really competitive. I mean, interest rates now, I don't want to disclose before I have my attorney yelling at us,
right.
but in reality, interest rates are the going interest rates. We're talking high 3% to the low 4%, and you can finance that money and do the repairs right away.
It does. It sounds like a dream.
It is a dream. We call it the Norcom Dream Loan because you really, whatever you can dream up, you really can do with the mortgage.
Thanks, James. We appreciate it. Kara, sounds like a good deal to me.
Getting some ideas. I'm getting some ideas. All right.